Hey guys, Boris Sloss from BK Forex. Welcome to our Forex weekly technicals for 827, 831, the dollar at a crossroads. As always, trading foreign exchange on margin carries a higher level of risk than other suitable for investors. I ask you to read this disclaimer very carefully to understand all the risks associated with trading margin and seek advice from a financial advisor if you have any doubts. Well, it's been kind of an interesting, although sideways week in many ways in FX. And I don't think it's been exemplified more so than by, give me just a second, I'm just going to pull this up, but a price action in euro dollar, which, if you think about it, it's just basically been ranging 33 to 34.50 pretty much for the last 5 days. If you look at a weekly chart here, as we can see, it sort of peaked a little bit, poked itself above this resistance, and came right back in. And the jury remains very much still out as to whether we have a true euro breakout here, or whether this is just a story of a false dawn, where we're kind of just testing the top and maybe starting to fade to the bottom. Overall, on the weeklies, basically, the price action looks like upward with a slowing momentum, and I think that's pretty much what the dailies confirm to us as well. The critical level here, obviously, 34.50 to the top side. If we can sort of break through with conviction, then 35 definitely comes into view, and then beyond 35, you are really looking towards the swing high tests of around 37. But to get there is going to require a lot more momentum than we currently have. And it's going to be interesting to see if next week whether we're going to be able to push through those levels, given, I think, a lot of uncertainty, and given the fact that the market is just so focused on the September NFPs that it may not want to push levels any more before that time frame comes in. I mean, I still think in many ways we continue to be really in a somewhat doldrum state, and the case of Fed tapering still remains a really strong uncertainty, and therefore you basically have this muddle through market, which is exactly what we're seeing in the euro dollar as far as the trade goes. In dollar yen, the dollar has definitely improved. The bid tone in dollar yen has definitely improved, but not fully. We've relieved, I think, clearly a lot of the negative bearish sentiments. So having posted higher lows over here and putting a breakout above 98.50 has definitely put us in a healthier position. But despite that, you're still looking at this 99.50, 150 as a very, very serious resistance level. And it becomes still, I think, a critically large question whether they're going to be able to overcome that huge resistance level. This is the weeklies. As you can see, the weekly actually looks relatively healthy because we bounced off the bottoms here and kind of ended closer to the tops. So the probability of further extension to in dollar yen is relatively good. And we certainly were able to take out 99s on Friday, but then we came right back in below, and we didn't close on 99s. So I think you really need to see a daily close. And if we go back to the dailies here, it's going to be important to note that. We really need to see a daily close above 99 in order for us to have some confidence that, okay, we're going to try to make this assault towards the really, really big number, which is the 150 number, as the major resistance level here. It still looks mildly positive on dollar yen, but the question mark very much remains, I think, just as much as the question mark in euro remains, the dollar yen question mark remains as to whether we can muster enough strength here to close. And I think the first order of business is got to close above 99 on dailies in order for us to get constructively more bullish on the pair. Pound dollar, on the other hand, is in a very clear and severe correction here. We had a classic failure, double top failure here at 57, and for the last 3 days we've just been doing nothing but drifting lower. Part of it is, I think, because despite the fact that we've had good UK data, we've had commentary from Bank of England officials, including Wheel, who are basically saying that QE is still not out of the question. So you have this very interesting dichotomy going on between positive UK economic performance and still considerably dovish monetary policy bent. And that's why I think the pound's kind of running out of steam here and giving back a lot of its profits. The key support mark here is 55, so that definitely needs to hold, because that was the big breakout mark from which we made the assault up to 57s, and that needs to hold. If we start to break considerably below 55s, it really starts to pull us almost in a straight line down to 54s, where we would really be holding a much stronger consolidation. But if you were to just simply look at this on a stair-step pattern, you see this was the first level of breakout support. This is the second. We're now sort of at this first step down. as we've climbed 3 steps up. Now we're sort of dropping for a step down. Now if cable turns itself around, the really big telling point for it, of course, is going to be this 57, 57.50 level. In order for it to really get a bullish turn, it needs to close above 57.50, hold that level, and then it would have a lot less resistance to the upside. So until it does that, sort of every rally is a sell, as market basically brings in more skepticism than positivism into the trade. And that's why I think watching cable here as on a relative weakness basis is kind of interesting as a trade. Another relative weakness trade that's definitely shaped up over the last week, although Friday's price action may have finally shown a little bit of a topping out pattern, is dollar CAD. Dollar CAD has had 5 straight days of up days. It blew through the 105 level, went all the way through 105.50, but now had a big reversal. And I wonder if this is going to be finally, this is sort of the first signal of correction in this big move that we've had. And now the first order of business is here is 104.50 as a support level. This is just like right above here, and then 104. So to the short side, those are the first initial targets that I think the shorts are going to press. To the long side now, having reversed this very, very serious spike towards the 105.50s, this now becomes, I think, the operating point for those that want to short into an uptrend. Basically, as long as the dollar CAD does not really break above 105.50, 105.60 sort of, right above these highs, every rally becomes a sell here, as you've had a classic exhaustion turn here. So possible trade coming up in dollar CAD, but if 105.50 or 60 gets broken to the upside, then all bets are off, and we now start going off to the races, going above, challenging the 106s, and really trying to make a move into fresh highs. So it's definitely worth watching because the price action here has picked up considerably over the last week and is very likely going to expand the ranges as a result. Aussie, on the other hand, is just marking time. 90 seems to be holding. We had a situation before where 92 was the big resistance, and now 90 ahead of the 88.50 seems to be holding for 2 or 3 days. That's a bullish sign for Aussie in the sense that we're holding at a higher low than the spike low that we made a couple of weeks back. And as long as we can hold these levels, it would build up enough of a base here to make a second run towards the 92 highs. And overall, I mean, if you look at an overall contract, we're talking about the fact that Aussie, in fact, is sort of just building out this massively long multi-month base, right? So the question is, as long as it stays first above 90s and secondly above 88.50s, the base stays in place, and every dip is a buy on the assumption that as long as the base is not broken, you will have eventually a turn to the upside. In the very near term, the short-term support level is just right below the 90 levels. As long as that holds, that gives us an opportunity again back to challenge 92s. It's still it's ultimately a 93.88 type of a very, very wide 5-point range, 5-penny range, and then in between that range you have the 92.90 range, which is really where we stand right now. So you have these range within a range kind of a situation, kind of like the Russian Matryoshka dolls. And until one of those things is broken, you basically don't have too much directionality giving you any kind of clues. But what's worth watching here is on a basically short-term basis, is you have very little risk here, and if you assume that this is the base that held, then you may have more potential now for at least a run back up to 92s. Kiwi is doing much worse in many ways, and Kiwi has just gotten shellacked all the way from 81s. Look at this. It's amazing. It's very much like a V-shaped pattern. We have 81s come right back down to 77s, then come right back up to 81s, and then come right back down to 77s. Now it becomes very key point here. Can we hold this 77 base? Because if it doesn't hold the 77 base, then it potentially opens up to fresh lows and a more negative construct of Kiwi in general. If it does, then we could try to make another half-hearted attempt here back up to the 80s. So again, here buying the Kiwi with these swing lows as your operating stops, or just below the swing lows as your operating stops, a very low risk trade, but doesn't necessarily mean it could work at all, because the momentum is certainly to the downside, and we haven't even had one single day that has printed positive so far to give us any inkling that some of the oversold conditions have been worked off. And I would kind of really hold off on that until they really were, unless you're just willing to basically completely spec on the position. So on the crosses, the interesting story here is if we sort of believe that the pound weakness may persist a little bit, and we talked about the idea that 85 in year pound was kind of a base, and it finally did bounce back up to almost 86s. The critical question here is, can we push higher? I think if we do push higher, the real resistance level here is 86.50, from which we fell a couple of weeks back, and I do think there's a little bit more potential here. Basically, a break of 86 here does open up the potential for 86.50, possibly even 87. And that in many ways could be a function of strong iPhone numbers that could give us a boost in euro. That in fact could give us a boost in euro to push us through 34.50s as we go forward. And then lastly, the other euro cross that's starting to really approach some key levels is the euro yen cross, right? Because that's performing relatively well. It's certainly held up, almost went up to 32s. A lot of resistance over here, right? But again, the euro yen cross is going to be very much a function of whether dollar yen can break through and hold 99s. If we close above 99s, we start pushing towards the hundreds, it's going to almost naturally drag, on the assumption that euro really doesn't collapse, it's going to naturally drag us towards a retest of the highs here. I think the high here is, I believe, let me see, view information window. I think the high here was around 34. Yeah, almost 34. It's 33.81s. That's going to be the operating swing high against which we run. But a breakthrough through 33s really does create an opportunity for us to push all the way to test the 34 highs. So very much worth watching. The high over here is just again view the information window is around 33.70. 32.74, so basically 33. Yeah, somewhere around there. So basically, if we can clear 33s, then we have a potential here to run towards the near-term highs of 34s, and that also can be very much worth watching, given the fact that if you have dollar yen remain near these 99s and continue to appreciate higher, the euro does not seem to want to go down. It seems to be holding the best with all the high beta currencies. And that could potentially create an interesting trade idea into the next week. So that's kind of how the week shapes up. It's still very much uncertain in many of the currency crosses. There's still a lot of summer doldrums going on, and we're looking for the major themes to push us through on the one side. The one theme that I think is clearly shaping up is that Europe is coming out of recession. That's why you see the euro resilience. That's why you see euro strength. And next week's IFO most likely should confirm that notion, which means we should have potential here to run at least the 34.50s on that particular theme. But as far as the U.S. themes, which is Fed taper, U.S. economy, all those things are very much open questions, and that's why you see so much ambivalence in the currency market for the time being. Wishing you guys the best of luck and the best of trading. This is Boris Schlossberg for BK Forex.